Hey everyone, it's Sharon Bahoman with Legacy Real Estate and Associates. I am joined today by Jen Lee. Jen Lee is an attorney. She's a debt and credit attorney. She's owner of Jen Lee Law Incorporated, a law firm with offices in San Francisco, San Ramon, and Tracy, California. She's a leading expert on debt, credit, and financial stress, having been featured in Consumer Affairs, U.S. News and World Report, and other national publications. And Jen is the co-author of Preventing Credit Card Fraud, a complete guide for everyone from merchants to consumers, published by Roman and Littlefield in March of 2017. Jen, welcome.
Thanks for having me, Sharon.
Thank you for joining me. I know your schedule is busy, so I appreciate you carving time out to have this conversation. I'm always wanting to bring information to folks, and credit's always the big question. I mean, when people want to buy a house, of course, if they're going to be getting financing for that home, credit's going to be the kind of the key thing that's going to determine whether or not they can qualify for a mortgage. And so the first conversation, usually the first question is like, okay, where do I begin? And I always say, we got to talk to a lender. We have to see, what you can qualify for, because there's no point looking at homes until we know. But then there's that fear. They're like, oh, well, if I complete the loan application, are they going to pull my credit? And there's always this worry about, if they pull my credit, how is that going to affect my credit score? So let's just address that right off the top.
That's the elephant in the room.
Exactly.
So yes, pulling your credit, if you do a hard pull, which means a lender is pulling your credit, that's going to show up as a pull on your credit report, does impact your credit score, but it's not a crazy impact. It's not like it's going to drop your credit score 100 points. And any credit pull done within about 45 days for the same type of loan for mortgages only counts as one pull. So if someone goes in and pulls my credit today and I get pre-approved, and then we go house shopping and I get a loan and they run it again, because they're going to run it again to make sure that you didn't go out and go crazy during the house purchasing process.
Exactly.
And they're going to run it at the end. And so it counts as one pull. I wouldn't go out and apply with multiple lenders and do something crazy like that. Apply with a broker or with a trusted mortgage person. But yeah,
okay.
It's not the end of the world to go. And you want to know what your credit score is. You want to finance you before you start shopping and you fall in love with something and then you find out this isn't within our terms. Yeah.
Right, exactly. And not only that, because you want to see if there's anything on your credit report that may flag the underwriter. That you may even have a score that could qualify you, but then there may be something on your credit report that's going to be a red flag for that underwriter, and they may want a letter of explanation or something else, or there may be something you need to clean up. So that's where you can be a help to people if they need to kind of figure out how to repair the credit.
Yeah, a lot of times I don't usually refer to it as credit repair. It has a bad connotation these days.
Oh, got it. Okay.
Credit repair, just because there's so many scams out there
with
repairing credit. But there are a lot of things you can do to improve your credit or build your credit, sometimes rebuild if there was something negative on there and we're trying to fix it. But yes, a lot of times there's something on there you may not have known about or you thought was fixed, or the lender is going to want to know, okay, so what happened here? Is this going to happen again? Did you have a bankruptcy a couple of years ago? That kind of thing, where they're going to want explanation. So.
Or it could be a case of fraud. So how do you help people when it comes to fraud, if there's fraudulent things that appear on their credit?
So if there is fraud in your credit report, and usually what I tell people is look through the names that are on your credit report, look at the addresses, look at all the accounts on there, see that are things that you recognize. Your employers are often listed, and if you see something on it that's weird, dispute it. Make it known to the credit reporting agent. Dispute. .gov has a great identity theft packet that you can download and helps you fill out a fraud report. So dispute everything. Make sure you don't let it go, because the longer you let it go, then the longer people think, oh, that was yours, and you're just disputing it now because it's a problem.
Right. Okay, can you repeat that? Because for some reason there was a little hiccup there. What was the name of the organization?
FTC.gov.
Okay.
So the FTC website for the Federal Trade Commission has an identitytheft.gov as well, has a nice report that you can fill out and keeps record of when you've reported things, what the fraud is and that kind of thing. Because what happens a lot of times if someone comes in, they're like, this is fraud, and we start examining and looking at it, and we realize it wasn't fraud. It was an account they just didn't realize they had,
Right.
or they want to think it was fraud, but it really wasn't. And so,
Okay.
yeah.
Okay, and I may need to talk to you about that, or I don't know if it'll be a conversation here, but I did just have fraud on my debit card recently,
Yep.
and my bank caught it and shut it down.
Yep.
But I
bank.
probably need to go and check to see if anything else has been done.
Yep.
That goes a little further. So, okay.
Yeah, and that's why I usually tell people, don't use a debit card like at gas stations. Don't use a debit card at grocery stores and things like that, because it's really easy to get skimmed.
Okay.
And so using a credit card gives you more protection for identity theft and for them not having access to your bank account.
Okay. All right. Yeah, because if they clean out your bank account, that can be, yeah. So now let's talk a bit about one of the other big looming things, especially for a lot of our millennials who are a big constituency of buyers that we have. Student loans. That's the other elephant in the room, right?
Yes, they're all kinds of fun these days. Student loans are, first of all, they're so overwhelming and stressful for people that you don't even know where to start. Like, you look at, you're like, I'm never gonna be able to tackle this amount of debt, and I don't know who in their right mind gave me this much money to go to school, but it is what it is.
Yeah.
I think the frustrating thing for a lot of people is their balances are going up.
Yeah.
So I'll have someone who borrowed $100,000 that now owes $200,000 because they're on a payment plan, but the interest is faster than the payments are. So, so yes, that is the elephant in the room. It affects so many people. I want everyone to know they're not alone if they have student loan issues. It ranges from entry-level jobs way up to lawyers and dentists and doctors. They're across the board.
What would you say? Oh, go ahead. I'm sorry. Go ahead.
No, that's it. Go ahead if you have a question.
Well, I was going to say, what would you say about those? I've seen ads for places that talk about refinancing student loans. Are those viable options, or would you caution people on those?
So the refinancing ones can actually be a good thing. It depends on your situation. So if you have federal loans and you refinance them to private, then you lose all of the federal forgiveness options, the payment options. So the only time it works to refinance to private is if you have a very stable income, you have a very stable household income, and you can make those payments and you're refinancing to pay them off quicker.
Okay.
But if you're in someone who's in an income-based payment plan for federal, you never want to change those to a private because you lose all those options.
Got it.
Yeah.
Okay. And so that would be definitely something to talk to a lender about, because that's going to factor into your debt to income ratio, depending on what your monthly student loan payment would be. Right. And then if you've had deferments and other things, you just want to make sure all that, again, that's the thing the underwriters are going to be asking questions about.
And some lenders require you to take 1% of your student loan balance as your proposed payment.
Okay.
And some lenders have specific student loan borrower programs where they will take your deferred payment or your income-based repayment and use that. So sometimes it depends on the lender too.
Okay. Okay, cool. All right. So what if someone has a past bankruptcy? Or, a past bankruptcy, and like how long ago does that bankruptcy have to have, I guess, closed or finalized before they can even consider taking out applying for a mortgage?
So there's this really bad misconception or myth out there that you have to wait 10 years to get a mortgage after bankruptcy, or 7 years. I've even heard that. Most Chapter 7 bankruptcies, it's 1 year after Chapter 7, and you're going to have to go through manual underwriting. You're going to see seasoning guidelines from lenders that say it's 2 years for FHA, but that's for automated underwriting. And so for manual, you can do it within 1 year with a Chapter 7.
All right.
If you're in Chapter 13, you can actually buy real estate while you're in Chapter 13.
Oh, okay.
And so it's just 1 year into the Chapter 13, which is a reorganization that you're allowed to get court approval and purchase real estate. So I have a lot of clients where we file bankruptcy just so they can buy a house quicker.
Oh, wow. Okay. And so I guess whether or not you file Chapter 7 or Chapter 13 really will depend on your unique situation.
Yep. Depends on the type of debt you have, if we're going to try to reorganize the debt, if you qualify for Chapter 7, because there's some income guidelines, and then what types of assets you have, because if you want to keep your assets, Chapter 13 is a better option usually.
Okay.
Yeah.
Okay. Any other recommendations as far as, I think the biggest question people have when they're about to buy a home is just really around, how applying for the mortgage is going to affect their credit. What other credit issues should people have in mind as they go to apply for a mortgage?
So a lot of credit scores are lower than you would expect because you're carrying a balance on a card close to the limit. And so even though you may have 5 credit cards and they're all at zero balance except for this one that's close to the limit, that will really drag down your credit score. And so a lot of people don't realize that if you're maxing out a credit card every month, even if you're paying it off, it'll show up like you've a maxed out credit card. That can be almost 100 points on your credit score.
Wow.
Just having one card maxed out.
Okay.
So if you're looking at your credit score, you're like, well, I don't have any late payments. I don't have any really bad history. What's going on? A lot of times just fixing that one card will fix your credit score up high enough to get the best rates.
Okay. Well, and here's another interesting situation. I'm sure you've maybe run into this. What about people who don't have a credit history? So, sometimes people will have a bad experience and they'll like, okay, I'm paying everything off and I'm never taking credit out again. And so now they go to apply for a home and they have no credit history at all. What would your recommendations be to them?
I would say to start establishing credit history as soon as possible. There are some lenders out there who will do manual underwriting with no history. Dave Ramsey talks about this a lot with the lenders that he prefers. I find it hard to find those types of lenders.
Yeah.
So I would recommend if you know you're gonna look for a house or you want to buy a house, or even if you want to get a car, that you should start establishing good credit history. It doesn't have to be a lot of credit. It can be 2 or 3 credit cards that you're just managing responsibly.
Is there certain types of credit that look better to lenders than others?
So lenders like to see a mix of credit. They like to see that you can handle an installment loan, like a car loan, and a credit card. The department store credit cards have the lowest impact on credit. They're not as highly regarded. So I wouldn't recommend you go get like Macy's, Nordstrom's, and all of those cards. Okay. But basic credit cards to start with will help you get good history established.
Okay. And then, I've heard people, or I've seen YouTube videos and heard other people say that it's good to try to maintain a balance somewhere like below 30%, but having some balance rather than having a zero balance. How would you, what's your thought on that?
That's a question. It's all these different scores and things are out there. You don't have to maintain any balance in order to have an 850 credit score.
Oh, wow. Okay.
Yeah, your balance that gets reported on your statement date should be less than 30% of your limit. Okay. If it's higher than that, it'll start lowering your credit score. Okay. So if you pay it off each month, then that's totally fine, but you don't have to have a balance or pay interest. A lot of people think you need to pay a little bit of interest in order to make your credit score the highest it can be, and you don't have to. Okay. You can pay it off every month and take it down to zero balance and charge your groceries and pay it off again the next month, and that's totally fine.
Okay, so doing it that way, like using it and then paying it down, because really they're just trying to see your payment pattern, that you're actually, you're using it, but then you're paying it, and that you're being consistent with paying it. I mean, is it better to do that than to just have it and not use it at all?
So you can just have it. I have several that are sitting there, but I use them once a year. Because otherwise the credit card companies will cancel them, and then that's another part of your credit score. When a card gets closed, it shortens your credit history. Right. Or it can shorten your credit history, and that's about 10% of your score.
Yes, that's something I've heard, that lenders usually like to see at least a couple of years of, the more years that you have with that card, the better, the longer history, I should say, you have with that particular credit line, it's more favorable.
Right, because all a credit score really is a risk analysis. How risky are you to lend money to? Right. And they're looking for all these factors of responsibility over time, responsibility with different types of loans, responsibility with limits, not going over them, not having charge-offs, that kind of thing. And so when you put all those together, the least risky person will have the highest credit score.
Okay. All right. So. All right. Well, I don't know. I think did we hit everything?
I think that's a lot of stuff that we covered.
Yeah.
Yes.
Yeah, well, I thank you so much, for answering those questions. Now, if people want to reach out to you, I mean, what kind of services can you help people with if they're trying to get their credit house in order, so to speak? Why don't you share with us what they can do to reach out to you and get some help if they need it?
Sure. So I call myself a debt and credit attorney because I deal with debt and credit. And sometimes the credit problem ends up being because of too much debt. And so we're kind of looking at the overall picture. So
Okay.
we do offer strategy sessions to help people figure out, okay, what's the problem, what's the goal, and how do we get there? And those can be seen on our website, so genlylaw.com.
Okay.
I do have Bernadette behind me. She's the elephant in the room.
Yes.
And now she's the elephant in the Zoom. But
Right. Oh, I like that.
but the idea is that like more than 70% of people have a debt or credit problem of some sort, and no one talks about it. Everyone thinks they're alone.
Right.
And so I'd like people to realize that you really aren't alone. Most of us have problems with debt and credit. There just happen to be different situations that we need to deal with different ways.
Yeah. Yeah.
So we offer all kinds of debt and credit discussions to figure out where you're at, where you need to go.
Okay, that sounds great. So what I'll do is I'll make sure to have your contact information there. So if anyone wants to follow up with Jen, you'll be able to reach out. Jen, thank you so much for taking time out of your day to chat with me. I'm hoping that this information will be helpful. And I like having information come from, like an actual pro who just focuses on working with credit all the time, so that, those little nuances that I may not have to deal with can really be addressed. So thank you again. Thanks everyone for watching, and we'll see you again soon.